Welcome back. Now, at the full-year mark, Dis-Chem grew headline earnings per share by close to 20%. This largely thanks to effective cost controls during the period. A final dividend of almost 28 cents was declared, reflecting an increase of 23.8%. Joining us for a closer assessment of the health of the pharmacy group's balance sheets is company CEO Rui Morais. Rui, thanks so much for your time this afternoon. Now, another set of pleasing results building on the growth we spoke about when your interim numbers were out in October. Now that we're at the full-year mark, double-digit growth in earnings, we are seeing revenue increasing as well, both on the retail and wholesale side. Just walk me through some of the driving forces of these earnings.
Sure. So good morning, guys. So firstly, I think fundamentally the earnings growth was driven by really solid cost containment. So we would have spoken holistically about the deployment of staffing framework 1, which we rolled into the group over the course of the last financial year. The framework was essentially not a reduction in headcount, but more a redistribution of appropriate resources invested across our store base. So for all intents and purposes, we invested existing people in new space and rationalized the right people in the right space as we went on through the year. We also looked at the ratio changes implemented in pharmacy, which meant we had slightly less pharmacists, more post-basic qualifieds in store, which reduced the cost of every single dispense, but actually increased the service element, so more people manning more dispensing points. That really resulted in the delta between revenue and profitability and was one of the main drivers of profitability growth. From a revenue perspective, I mean, very traditional in terms of the revenue stack up from a growth point of view. We obviously had space growth, so the 20 new stores playing into the delivery of a portion of the revenue growth, and then some decent like-for-like growth, primarily driven by what was and from a highlight perspective for me is increased in market share in the dispensary space, which continues to emphasize the fact that we are South Africa's biggest pharmacy by market share, and ultimately, with our healthcare ambitions, the pharmacy script traffic in order for us to understand the baseline health of South Africa and improve it is fundamentally important. So that was probably for me and for the organization, the highlight of the revenue number.
And just going back on, your cost containment measures, you mentioned the strategy around redeploying staff, that being framework 1. How far are you in that process? And I see there's also mention of framework 2 in the results. Just walk us through what that entails.
Sure. So, I mean, we've deployed that in its entirety across the group. Obviously, there will be some spillover benefit as a function of the timing of deployment in FY25 as we move into FY26. So you'll see some benefit concentrated in the first half of the trading year. We do talk about Framework 2.0. I think that's the evolution of how we think about cost in store. As the business has grown, and obviously everyone is familiar with the fact that it was entrepreneurially grown, and there was a lot of decision making that was decentralized. And by that I mean there was a skill set required as a manager in store that controlled stock and people and service and all of the aspects that traditionally would be associated with almost an owner-run business. As we get scale and we centralize a lot of those functions, the need for that skill set goes away. So if you think about something like forecast and replenishment, which automates the ordering process and controls day stock cover in store, that skill set is no longer needed at a management level. So what we're actually doing is we're looking for a lower price point of management that is really focused on customer service. And that's really underpins Framework 2.0. So we're sizing that opportunity. We're obviously training and building that job description for a new level of management in the group. And we will take new store opportunities and obviously attrition, to increase the penetration of the lower price point management that I talk about.
Right, your wholesale segment steadily growing, and we see revenue up close to 10% on that front, and your retail stores still the biggest contributor to income on that front. But in terms of market share, what are you seeing there, especially when it comes to the independent pharmacies?
Sure. So, I mean, obviously, South African pharmacy is consolidating. I mean, it's a structural theme that plays into this market. So you see corporate pharmacy consolidating the independent market. But my view has always been, and I mean, they're global examples, as a function of the geographies of our countries and certain markets not being big enough for corporate pharmacy, that consolidation kind of taps out at, call it 65 to 70%. So 65% of the market will be owned by corporate pharmacy, and there's an important job to do from an independent pharmacy perspective to deploy healthcare services to the rest of the market. I think having the wholesale arm that we have and realizing that the wholesale business is about scale, being able to service that independent market through a franchise brand like the Local Choice, which effectively benefits from our scale, some of our innovation, and packages it in a franchise offering is important. Our goal is to ensure that as much as we want to be the most dominant corporate pharmacy player, we also want our franchise brand to be the most dominant franchise independent player. And I think what you've seen in the wholesale environment in terms of external sales growth, which is supporting independence and the Local Choice, we've seen CAGR growth over the last 5 years of 24%. So our market shares continue to grow in terms of how we penetrate independent pharmacy. And if I'm not mistaken, we now service about 1,400, so 90% of the South African market that is independent pharmacy and corporate pharmacy. So other than our competitor, we're servicing from a wholesale perspective about 90% of the pharmacy doors in South Africa through CJ.
All right, Rui, thanks so much for your time and just taking us through the year that was for Dis-Chem. That was Dis-Chem CEO Rui Morais.